On company financial results now, Sasol has blamed its 44 billion rand loss to a poor economic climate. The petrochemicals group says it was hurt by weak market conditions with strong pressure on margins and low chemical prices, resulting in a 5% decline in revenue to 275 billion rand. The firm has, however, benefited from a lower rand and oil price along with stronger refining margins as well as lower total costs and increased sales volumes. Headline earnings per share are also down by 66%, and final dividend hasn't been issued. CEO Simon Baloyi speaks to us now. Thank you so much for your time, Simon. Let's start here. Sasol had warned of these losses just a week ago. Talk us through the highlights of the outcomes this time.
Evening, Tibisang. Thank you so much for giving us this opportunity. Yes, we did release a trading statement last week to outline, our current business performance. So, let me step back and firstly, articulate in terms of what has impacted our business. Firstly, it's, about the controllables and the non-controllables. So for what we can control, we actually saw an improvement in mining productivity, which went up year-on-year by 3%. The gas production from Mozambique, that went up year-on-year by 6%. The secondary production, year-on-year improvement of 1%. And across the chemical value chain, both Chemicals Africa and US and Eurasia chemicals, those went up by between 2 and 3%. So you can see on the volumes, there was actually an improvement. However, we're facing macros, like the diesel differentials that were lower. The Rand oil price over the period was also lower. So that impacted on our EBITDA. The big impact, however, was actually the chemical pricing across the globe, where we saw continued weaker demand. Notwithstanding those challenges, actually our EBITDA was 60 billion rands, which is just 9% as compared to last year. But the headline earnings came when we had to do a remeasurement, which was driven by the impairment of our US assets. And I must state, at this point that the US asset, it's a fantastic asset. We finished building it. It's operational. However, the pricing, long-term pricing assumption on the differential between ethane and ethylene, those have, since driven the value or the carrying capacity of that asset.
I'm glad that you raised that because the element has also been reported as a loss-making, especially when we look at the write-down on its own. Talk us through exactly what the calculation is in terms of, in the long run, is this still going to be feasible for Sasol?
Yes, you remember the impairment calculation is based on the carrying capacity of the assets. So those assets are still fairly new, so they've got a higher carrying capacity. However, you must always check that with the value in use, which is the value that you'll derive from the asset over the long term. So when we did the calculation based on the latest pricing assumption, we had to impair those assets. However, in the long term, you remember management interventions are not yet factored into the overall impairment calculations. So we already started with interventions in April, and those will continue. So we do see a long-term value that will derive from those assets. So we're not waiting for the macros to turn around. We actually have self-help measures in order for us to turn around the business.
I sensed a bit of the same optimism when you spoke about the local dynamics in the first response that you gave. I'm now interested in the near-term outlook as we are in the second half of 2024.
Yes, for us, in the near term, it's all about full business potential. And to that, we're going to maximize our cash generation in, firstly, the South African value chain. We have given market guidance where we see our mining and secondary operations and operations generally in Southern Africa where we think we're going to be. So we're seeing, holding between 0 and 4% in terms of the volumes. The macros are the micros. Then in the Americas, we've given guidance to say we see the volume remain very flat until we do. So the improvements will come in terms of the EBITDA margins uplift. And then that uplift will come from our own interventions, which is focused on streamlining, refining our go-to-market strategy, and an asset assessment of our assets to make sure that we can deal with underperforming assets, either fix them turn them around or dispose of them if possible.
Lastly, the Constitutional Court recently dismissed an appeal regarding allegations of excessive gas pricing on the side of Sasol. What's the next move from this?
The next move is that you remember, the gas price is set by NESA, so all parties will have to go to NESA, and because NESA did that determination of the pricing, and we will handle it at that level.
Thank you so much for your time. Simon Baloyi is the CEO at Sasol, talking us through their latest financial results.